I mean, when you have a drop like this and price consolidates without breaking to the upside, it inevitably breaks to the downside. So I do think that this down move, this breakdown, and we had this bearish channel. In fact, let me show my chart here so we can kind of gauge that. But basically, the writing was on the wall that we were going to head lower, and the question is, how low are we going to go? And you could see this channel here. If we connect these lows and drag it up to these highs here, this was a bearish channel. I mean, when you have a drop like this and price consolidates without breaking to the upside, it inevitably breaks to the downside. So to me, this is the next move to the downside. Now, what's interesting about this is I do look at it as the beginning of the last move down, meaning that wherever we bottom out here is likely the bottom in Bitcoin. A couple things, and this is going to what I was talking about in the video that I wanted to reveal, is that basically when I look at FTX, I see Lehman Brothers. And I haven't heard anyone else drawing this comparison, but if you look at the power that Lehman was in that time as one of the major banks and where FTX was as one of the major exchanges, both of them failing make a lot of sense as being that catalyst. Now, what's fascinating about this is if we go to the S&P 500, right? And I'm going to go all the way back here. We're going to go all the way back to 2008. Bear with me as I get there because it is quite a ways back. But if we go all the way back, what we can see is that when Lehman Brothers occurred, all right, this is where it occurred right here.
Yeah.
You can see that the S&P was not at a bottom. So it wasn't the bottom, but it kind of created that last drop in the markets that brought us to the low of 2009. And so one of the things I was thinking about is, okay, it took about 6 months from Lehman Brothers to the low on the S&P 500. So in that thought process, if FTX is the Lehman event of the crypto markets, you're looking at about 5 to 6 months before we bottom, which puts us in April of next year, May, somewhere June-ish, right in that vicinity. And then if you look at the price decline, it went from about 1,200 and change to the low in 2009 of around 600 and change. So 40 to 50% decline. So then if we map that over to the crypto markets and we go to Bitcoin here, what's fascinating about this is that you basically take a 50% decline from about 18,500, which was the break point. And if you zoom out, there's a long-term trend line going back to 2017 before the bull market to the 2018 lows of the bear market to the crypto low. And where does that trend line go? Basically to that 40, 50% decline. So for me, I start to put the pieces of the puzzle together and say, okay, you know, this cycle, again, not quite the same as past cycles. This will be a little bit of a bigger correction, which makes sense with the Fed and with what's going on with FTX. But again, you can kind of start to see the similarities developing in this environment versus what happened in the Lehman Brothers collapse. And I do think it's very, very similar. And remember, it's similar because greed and fear are what rules investors, right? It's not, you know, there's no fundamentals. It's greed and fear. Fear drives it to the downside. Greed drives it to the upside, to the crazy extremes. And so the Lehman collapse created the same type of fear that the FTX one is, which is people drawing out their money from exchanges and so forth. So it's kind of cool to think about it like that. But then that's to me what I'm expecting here. I think this is the final drop. And I think we'll bottom in the next 5-6 months. Yeah, so there's no doubt there is going to be a chain reaction of issues, right? I mean, when you have these institutions, number one, the biggest thing for crypto right now is that when you have big institutions that get burned to the tune of billions of dollars that they invested in FTX, they're not going to go invest in more crypto projects until we get regulation and transparency. So right away, that just shuts off that door to the rest of cryptocurrency. And that's a problem, right? I mean, it's going to stop innovation in the near term. It's going to make it so hard to raise any capital until we get this regulation out there. So I think overall, he's right in that it's going to cause more pain. There's no doubt that it's just the tip of the iceberg in terms of other, you know, hopefully no one any bigger than FTX, but there's going to be other bankruptcies. And I think if you look at the .com era and compare what went on there, you have to expect a lot of these smaller cryptos to ultimately get flushed out and go to zero. Again, in the .com era, we saw the same sort of greed driving some of these companies that had no reason to go up to, you know, $100 million valuations or greater go up, and they had to be taken out. And I think that's exactly what we'll see here in the crypto market for the next 3 to 6 months. So to me, I think that for Bitcoin, that's actually part of the first dip. So right now, we're technically, they haven't announced that we're in a recession. I think we probably are, but according to the Fed and government, we're not yet. So I think this is the first phase. What I'm thinking is the first phase is what helps drive Bitcoin to its low pivot. And then I actually believe that the second phase, where the economy actually is going to suffer the most, will actually be where Bitcoin flips and starts to become a safe haven for assets. And the reason it's going to flip is because you're going to start to have a lot of investors looking at the economy getting worse and worse and worse, and they're going to start giving up on stocks like Apple and Microsoft and these other ones as the consumer just runs away. And so the question is, well, where do you put your money at that point? And this is going on the assumption that we do have regulation and transparency within that period. But I do think that once we get that transparency in the crypto market, smart money, billionaires, they're going to start moving towards Bitcoin. And I actually think in that second dip, Bitcoin actually outperforms. Yeah, I think that the high on the dollar is, at least for a while, the highest point. And I think that we will see bounces. I don't know if it's going to be on the PPI number or other things. The Fed, I could see jawboning and trying to keep pressure. And this is, by the way, this is another thing that people aren't talking about, but the Fed doesn't want the stock market to go up. And to look at this rally, they're probably thinking like, okay, now we have to talk more hawkishly than we were intending, because we can't have the stock market keep rallying. The wealth effect makes people obviously spend more money and drives prices up when it's supply and demand. So I think that's the key there, is that the Fed is going to try to keep the lid on the markets. And then I think also you'll have to look at the factors involved in these next couple economic statements. But I would guess that the dollar is probably at a short-term peak. Bounces, yes, but I think it's going to head lower. And by the way, I don't think that that's actually a great thing. I think right now the market's been craving a weaker dollar, but there will be a point where a weaker dollar is really, really bad, because it's going to tell us that the economy is in tailspin. Yeah, that's such a good question. I'm not sure if I have a great answer for that. By no means do I have any insights that are any different. I think that there's always that chance. I think it depends on the projects that continue to be developed on the network. The question I guess I would throw back is if we see a big slowdown in the economy and some of these projects that were developed on the Ethereum network go belly up, does that then hurt the price of Ethereum? And I'm not sure if it will, but it would just be something that I would kind of think about, as it seems like Ethereum's more like a security that would be important based on economic activity, versus Bitcoin, which is more of a commodity. Yeah, I think that's the key, is that it's whoever comes out and survives this next period in crypto, that's going to be the long-lasting king at that point, or queen. And I do think that that's the positive for Ethereum, is that it certainly seems like it's the most stable of these layers to be built on. Yeah, as of now, the chart is still very vulnerable, right? So we have this trend line down here, which connects through these two lows and through this area. And what you could see is when price broke down, it bounced, but it couldn't recapture that trend line and still has faded here. So for me, as I'm watching this, I'm watching that area. Can price get back into this kind of wedge pattern, maybe break above this? But as long as it stays below here, it is vulnerable to potentially retesting the lows down here.